The Dow and S&P 500 notched record closing highs on Friday's trading session in a truncated Wall Street session. Asian markets opened largely higher, while the GIFT Nifty is suggesting a higher start for the Indian markets. Crude prices correct, fall 3% last week as geopolitical concerns ease. Gold gains on Friday on a weaker dollar and easing tensions in West Asia. India's second quarter GDP slows to 5.4%, the lowest levels in the last 21 months. Manufacturing growth slows significantly to just over 2%. Government says growth is disappointing but not alarming. Automakers post a mixed bag of sales in November. Passenger vehicles and two-wheeler sales largely met estimates, while the commercial vehicle sales remain under pressure. A CNBC TV 18 newsbreak confirmed as the DM announces a merger with care hospitals via a share swap. Sources also tell CNBC TV 18 that the promoters of Cipla are looking to sell 1.72% stake in a deal worth 2,000 crore rupees. RBL Bank and Bajaj Finance also mutually agreed to terminate the deal to issue co-branded credit cards. Hello, good morning. I'm Vinny Motiwala. You've tuned into Power Breakfast on CNBC TV 18. Surely an exciting Monday that's shaping up today, and hope it's one that is exciting as well. But let's look at the Asian markets. US markets, surely a positive close that came in. Asian markets, what we're seeing, a bit of a mixed opening, though. Diamond index that you're looking at, it is up 2%. Hang says it is up almost 0.7% in trade. Nikkei, that's where a bit of a subdued is coming in because that is down 0.3%. But other than that, most of the markets in Asia have opened up with a positive bias. So look at the ASX 200 as well. That too is up 0.3%. GIFT Nifty, and what is that implied open indicating for the Indian markets? Slight bit of a muted to a positive start is what we're expecting. 46 points uptick, so not a bad start that one could be watching out for the GIFT Nifty. A positive start is at least what is indicated as of now, GIFT Nifty. So yes, keep an eye out on that. That's how the Asian markets have opened up. Indian markets expected to open up in the green as well. But in the US markets, like I was mentioning, Wall Street that ended higher with S&P 500 gaining 33 points and Dow Jones gaining 188 points. When you look at the tech-heavy Nasdaq, that gained 157 points. Now, Dow Jones as well as the S&P 500 notched all-time high intraday and closing highs in the Friday's trading session, though it was a shortened week and a truncated week in the U.S. markets. Now, majority of November trading was centered on post-election rally that we saw after Donald Trump emerged as the winner. And staying with the U.S. markets, let's also listen into some of the expert opinions that we have coming in from Ed Yardeni, who is the president of Yardeni Research, as well as Stephen Whiting, who is the chief investment strategist and chief economist at Citi Wealth. Listen into their views.
Remember when this bull market got started, it was kind of like the Rodney Dangerfield bull markets. It got no respect because it was so narrow. And we argue that give it some time, it'll broaden, and that's what it's doing now. And we've certainly seen the mid caps go on fire, and then the S&P 493 I think are going to do well, increasingly well. I think the Trump administration, incoming administration, bought some time, kind of placated the bond vigilantes by basically acknowledging that we've got a problem with the deficit, and the new incoming Treasury Secretary is somebody who's got a lot of market experience, so he's kind of like one of us, if you will, when the market looks at this administration.
Look, it's not a boom or bust. It's not V-shaped. Consumers have lived through a very large releveling of consumer prices, and we're now in a slowdown phase for that. The labor market is also producing, on a trend basis, fewer job gains. We do think that the November employment report will be strong. It'll be a bounce back from weather-related effects. But this combination is keeping us in a quite moderate trend for consumption. But the really great news for the economy is that we just haven't had an economic boom. We haven't overproduced for it.
Okay, now let's get to the final update on the global front, and what is that happening this morning is in terms of the European market, how they ended on Friday. Now, following a mixed morning session as investors assess the latest Eurozone inflation data that came in, the German index, that is the DAX, that gained over 200 points to close, while the French CAC, that ended 55 points higher. Now, the British FTSE, that also ended marginally flat when you look at it, gaining just 6 points on trade on Friday. Stock 600, that closed up almost 0.58% to trade. So good gain that came in for Stock 600 with almost all the sectors and major bourses in the green. So that's how we saw in terms of wrap that came in from the European markets. But how is that the US market, the European market, how is that going to be impacting our Indian markets this morning? We have a research team joining in with us. We have Hormas as well as Sudarshan joining in to give you and set you up for the day today. Good morning, guys, and thank you so much for joining in with us this morning. But before I come to you all, let me tell you all how the market setup is looking like. Because yes, surely when we saw coming in on Friday, 24,100 is what the Nifty managed to see, right? Closing above that mark. So that was quite interesting coming in from the Nifty's front that, yes, we did close above that level. Broader markets, bit of an underperformance that came in on the broader market front on Friday. Now, top gainers and where we saw buying coming in was the pharma pack. So when you look at any of these pharma names, we saw good gain coming in there. And a lot of Nifty names that saw moves coming in was also in terms of Airtel, Cipla, Sun, M&M, and like I mentioned, pharma names that are also buzzing on the screen. So Cipla was among the gainers in the Nifty 50 with Sun, DVs. We have also Torrent Pharma other than Nifty 50 that was seeing good gains coming in. But for the week, what happened also was some of these Adani names that saw a move coming in. So Adani Enterprises was among the top Nifty gainers. Then we had BEL, Shri Ram Transport, Adani Ports, ONGC, seeing good gains in terms for the week that we saw. Other than that, Adani Energy, Green, Vodafone, Idea, GNFC as well as NBCC in the mid-cap gainers that came in and saw a good move for the last week. FI, FIs continued to sell this on Friday as well. 4,383 is the FISL, while DIIs continue to see a buy coming in from that side. What are the important factors today we're watching out for? While US market obviously closed in the green, GDP data in India that was weak, so keep an eye out on that. GST collections, when you look at it on a year-on-year basis, yes, saw growth, but month-on-month basis, a bit of a decline. RBI policy, 6th of December, keep an eye out on that. Geopolitical developments and anything in terms of FII activities is something that we're keeping an eye out on. But yes, that's how the market setup is looking like. Nifty implied open, indicating a bit of a positive start is what we are watching out for. But important stocks to keep on your radar this morning. We have Hormas joining in with us. Good morning, Hormas.
Morning, Winnie, and plenty of them to track considering it was the weekend as well, right? I start out with a confirmation of a CNBC TV 18 news break that came in from Aster DM, where they announced the merger of Care Hospitals with itself, and they will be allotting 1.86 crore shares of itself to acquire 1.9 crore shares of Care Hospitals, which is backed by Blackstone and other affiliates. Now, the couple of block deals in focus today, one of which being Cipla, where promoters may sell up to 1.7% stake. It's a 2,000 crore deal. The floor price is a 6% discount to Friday's closing. Home First Finance is the other one where promoters are likely to sell up to 14% stake. Now, that deal is worth around about 1,260 crores, and that floor price is an 8% discount to Friday's closing price. Now, the other two stocks that you keep an eye out for is RBL Bank and Bajaj Finance, because they've mutually agreed to stop the issuance of new co-branded credit cards. Now, RBL Bank also clarified that they have reduced their dependence on these cards from Bajaj Finance. It is down to around 37,000 in this September compared to well over a lakh in the month of September last year. Now, Cochin Shipyard is the other one. Orders keep coming in for these shipbuilders, where they have signed a 1,000 crore contract with the Defence Ministry for a large Indian naval vessel. KC International has won another order. It's a 1,040 crore order from the T&D business in the international markets. Now, Greaves Cotton has approved the IPO of its electric subsidiary, which is Greaves Electric Mobility, and that is another IPO that's in the works. That will be a combination of a fresh issue of shares and an OFS. Biocon has received the regulatory nod for its Yes Intake, which is used to treat Crohn's disease and other diseases. And auto sales were a mixed bag, where Escorts Kubota sales were down on a year-on-year basis. Hyundai sales were below expectations, while most of the others were in line or marginally above expectations as well. Back to you.
Thank you so much for that, Hormas. Keep an eye out on a whole host of stocks that he just mentioned. But Sudarshan is here finally to tell you what are the FNQs that you should be keeping on your radar. Good morning, Sudarshan.
Morning, Vinny. So on Friday, we saw led by heavyweights, Sensex and Nifty closed with gains of almost 1%, while mid-cap index and Nifty Bank closed with minor gains. And today, tracking lower than expected GDP data, positive global cues, and higher monthly data for GST, GIFT Nifty is indicating start with minor gains. Talking about the flows in the cash market, we saw continued selling by FIs. FIs have sold more than rupees 4,300 crore, while DIs have bought more than rupees 5,700 crore. In the index futures, FIs bought more than rupees 200 crore. At the same time, they have reduced long positions by 560 contracts. Also, they have reduced short contracts by 4,054. And with this, FIs long exposure now increased to 33%, and clients' long exposure now stand at 65%. On the option front, 24,500 call has seen addition of more than 11 lakh shares and premium is 40, and 24,000 put has seen addition of more than 28 lakh shares and here premium is 85. And with this support level for Nifty is now at 24,050 and resistance is now 24,250. One stock that will be in focus today, that is RBL Bank, after it has discontinued its agreement with Bajaj Finance.
Okay, Sudarshan, thank you so much for that update there. But on that note, we're going to slip into a very short break. Up next, we'll talk about India's Q2 GDP that comes in at a shocking 7-quarter low. We get you the fine print on the other side. Thanks for staying tuned to Power Breakfast on CNBC TV 18. But let's talk about India's GDP data for the second quarter that came in at a shocking 5.4% against the expectation of 6.5% growth. Following this, the economists have slashed their full-year forecast to between 6 to 6.5% from a 6.8 to 7% earlier. Lata is joining in with us to give us the editor's take. Lata, good morning. And is this already priced in, or it's a big concern that's coming on this front?
I'll come to that in just a minute. First, the internals of the GDP, it's been dragged down terribly by mining and manufacturing. Mining was actually negative. So industry basically is the one that's let it down. And services has not come up to speed, couldn't compensate, especially financial services. One thought finance real estate did well, but it didn't even make it to the 8% mark. And trade, hotels, another big sector, also didn't do too well. If you look at it from the expenditure side, private consumption is at a modest 6%. I mean, if you want a 7-8% growth, you must have a much better private consumption number. Until now, CapEx was keeping us well, hydrated. All those 8% growth numbers were because of government CapEx. That's now down to 5.4. That's a shocker. And you could see it in the fiscal data also. When the government released the fiscal data on November 29th, on Friday, you could see the fiscal data also, government CapEx has not picked up. It's below last year's levels, much below. Now, how will the markets react? Well, you're right in saying that the markets have factored in the Q2 numbers already. And because the Q2 numbers were bad, you have a bad Q2 GDP. But I would still think that the shock of 5.4 perhaps may still have some reverses, not a huge one. Now, actually, action shifts to the Reserve Bank. Because the policy is due at the end of the week itself, the expectation is that there should be a rate cut. But the large number of economists expect the Reserve Bank cannot cut when the last inflation number was 6.2. Their mandate is to keep inflation below 6. How can you go and cut when you're above the mandate? So probably it will be a CRR cut, and a CRR cut actually will be banks positive. Banks actually make more money on their deposits. So important to keep that. Today you could see a bank positive day. And finally, the new estimates for growth, when it's as bad as 5.4, when your expectation was 6.5, obviously the full year estimates will have to be brought down. Just look at every single brokerage, Nomura 6.7 to 6, Goldman Sachs 6.4 to 6. On the whole, I can tell you that the average was between 6.6 and 7. Now the average, the range has shifted from 6 to 6.3. So that's quite a cut.
Absolutely, quite a cut coming in there. Thank you so much, Lata, for joining in with us and giving us those details on the Q2 GDP data. But the CEA, Anantha Nageshwaran, has said that the real GDP figures are disappointing but not alarming. Addressing a press conference, he also said that the government is sticking to its full-year growth projection of 6.5% to 7% growth. Listen in.
The 5-year GDP growth rate is in real GDP or GDP at constant prices is improving at 4.4% compared to 4.2% in the second quarter of last year. In order to give you some context, because bulk of the slowdown in the second quarter from the supply side, because it is attributable to the manufacturing slowdown and also the slowdown in mining and quarrying sectors.
Okay, now getting you some political news developments from Maharashtra. A day after the state BJP announced that the new Maharashtra government will be sworn in on the 5th of December, the caretaker Chief Minister Eknath Shinde made a strong pitch for his return to the top post, asserting that he worked as a common man. Eknath Shinde was addressing the media in his native village, where he spent the last 2 days after meeting the Union Home Minister Amit Shah on a Thursday. However, a senior BJP leader has stated that Devendra Fadnavis' name has been finalized for the CM's post. Okay, on that note, we're going to slip into a very short break. Don't go anywhere. After the break, we'll bring you what's happening in the world of commodities. Welcome back to Power Breakfast on CNBC TV 18. Now let's go across to Manisha, who's standing by to tell us what's happening in the world of commodities. Manisha, good morning.
Morning, and thank you for that. Well, I'll start with the crude oil prices, which fell 3% for Brent and 4.5% for WTI in the previous week. And this week as well hasn't started on a positive note. I mean, it's slightly in the red even now. There are easing concerns on supply risks from Israel and Hezbollah. And then there are prospects of higher supplies in next year as well, from US, from non-OPEC and OPEC and allies as well. Interesting to watch would be in this week is the OPEC Plus meeting, which is on 5th of December, on what kind of a statement and guidance comes in from there. In the meanwhile, you also have gold prices, which have posted worst monthly lows in a year for the month of November. We've seen prices decline by 2% in the previous week, 3% for the month of November. And in the month of November, you saw the dollar index gain up by 2% as well. Well, the strength in US dollar has been exactly the reason that you have seen prices wane continue in case of gold. Same is the case with silver as well, $30 an ounce just about holding. So when you look at the overall commodities as a sector, we have started this week, or rather this month also, slightly on a weaker note.
Okay, Manisha, thank you so much for joining in with us and giving us those updates in the world of commodities. But with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Don't go anywhere. Your Bazaar Morning Call up next.